If you follow Toronto real estate, today's Bank of Canada update matters. The bank kept the policy rate at 2.25% on January 28, 2026, and the message was clear. The next move is hard to call because uncertainty is high. So in this video, I'll break down what the bank said, why CUSMA is part of the story, and what this means for your mortgage, your renewal, and your buying or selling plan in 2026. Hello everyone, my name is Hutan. I cover real estate with real numbers and real strategy, so you make better decisions with your money. Let's get into the update. So what happened today? The Bank of Canada kept the target for overnight rate at 2.25%. The bank said the economic outlook looks similar to the October report, but risks are higher because of unpredictable US trade policy and the geopolitics. So why the bank stayed on hold? Here are the key reasons straight from the bank statement. First, Canada's growth is choppy. After a strong third quarter in 2025, the bank said thinks GDP growth likely stalled in the fourth quarter. Exports kept getting hit by US tariff, while domestic demand looks like it's picking up. Secondly, the labor market looks softer than many people feel day to day. Employment has improved in recent months, but unemployment remains elevated at 6.8%, and fewer businesses plan to hire. Third, inflation sits near target, with some noise in recent data. Headline CPI moved up to 2.4% in December, influenced by base year effects tied to last winter's GST, HST holiday. Core inflation measures eased from around 3% in October to around 2.5% in December. The bank expects inflation to stay close to 2% over the projection period. The bank's projection, GDP growth of 1.1% in 2026 and 1.5% in 2027. The Monetary Policy Report adds the bigger theme. Canada is adjusting to US tariffs and a new trade landscape, and the adjustment takes time. The bank also puts a spotlight on the upcoming review of CUSMA as a major uncertainty for Canada. So what uncertainty means in plain language? Here is what the bank is saying without economist language. Rates are on pause, but no clear signal for the next step. Trade policy is the wild card. If trade conditions worsen and growth slows, pressure builds for lower rates. If inflation heats up again, pressure builds for higher rates. It's important to note that markets and economists are split on the next move, which lines up with the bank's uncertainty message. So what does this mean for your mortgage rate? Two quick pieces. Piece one, variable rate mortgages. When the bank moves the policy rate, short-term rates move in the same direction, including prime, which banks uses to price variable rate mortgages. So a hold often means your variable rate pricing stays steady for now unless lenders changes the spread on the variable rate. Piece 2 is fixed rate mortgages. Fixed rates tend to move more with bond yields and market expectations, not one for one with the overnight rate. So a hold from the bank does not guarantee fixed rates stay flat, because markets price future inflation and future growth according to bond yields. So what to do if you're renewing in 2026? If you renew in the next 3 to 12 months, focus on control and not predictions. Step 1, know your renewal date and your penalty rules. Ask your lender. Prepayment limits, blending options, portability, and penalty math for breaking early. Step 2, run 2 payments plan. Plan A, current rate plus 1%. Plan B, current rate minus 1%. If Plan A breaks your monthly budget, tighten the loan amount or extend amortization where possible. Step 3, decide how much risk you want in your life. Variable gives flexibility if rate drops later, but payments or amortization can shift. Fixed gives payment stability, but breaking early can get expensive. Lastly, what this means for Toronto buyers and sellers. For buyers, a steady policy rate helps confidence because monthly payment math stops moving every meeting. But affordability still depends on income, job, stability, and listing supplies, not only the bank's decision. For sellers, buyer urgency stays muted when people feel uncertain about jobs and trade. Pricing and presentation matter more in this selective and tough market. A clean strategy wins. Pricing based on current comps, tight offer dates, logics, and strong preparation. Bottom line, the bank held at 2.25% on January 28, 2026. Inflation sits near target, growth look modest, and trade uncertainty, including the Kuzma reviews, sits front and center. If you want help building a plan for your purchase, sale, investment, or renewal based on your numbers, reach out and I'll map out the options for you.